Okay, good morning everyone. Welcome to this live intraday strategy webinar. Michael Boutros here with you guys. We're about 15 seconds out from a barrage of prints. You got the Canadian GDP. We're looking primarily at the annualized number here and the U.S. personal income and spending. Got the dollar index here on the right. We have started to turn from resistance. Print comes in stronger than expected across the board, guys. So personal spending is 0.1 versus 0.7 at expectations for personal income. PCE deflator is broadly in line with expectations. GDP coming in weaker on the Canadian GDP report. Remember, this is for the first quarter. Slightly weaker on the year-on-year for March as well. Let's take a quick peek at what's going on in dollar CAD on the back of this news. Okay, so this was the weekly open right here at 130.20. It looks like we just came off that. Wouldn't start chasing this just yet. It set a pretty decent opening range for the week, just below resistance, 131.13, 131.17. We've been talking about this region for a while. Still going to be the region to beat here for dollar CAD. Still like the upside. The bearish invalidation yesterday, or the bullish, invalidation yesterday was raised to 129.53. So if you're holding those longs, looking good. All right, now that we got that data out of the way, good morning to everyone here in the room. Eileen, good to see you. Adam, Pete, Rick, Sophia, I hope those of you who are trading stateside had a good extended break. Back in business. Keep in mind a couple things as we jump into the session here, guys. It is the final day of May trade. So I'm always very mindful I'm trading during these conditions, whether it's the monthly open or monthly close. You can see some pretty radical intraday moves. So just it's a good time to practice a little bit more prudence on your trades and maybe be a little bit more reserved as far as your use of leverage. That being said, heading into the end of the week, we still have a lot of event risk too. We got the ECB on tap. We got durable goods from the United States still. We do have obviously non-farm payroll print on Friday is going to be massive, right? So nice week to kick things off. As always, if you have any questions, feel free to throw them out on the message board, guys, whether it's strategy or pair. I see a question here already. When you get a chance this morning, can you go over Aussie? Sure. Hasn't been on the menu for me just as of the start of the week. I've kind of been tracking more sterling and CAD, but we'll definitely take a look at that. Francis, good morning to you as well. Great to see you, sir. Rick. All right. So let's backtrack a minute. We'll come back to dollar CAD. We've been tracking this one. Again, there's no imminent trade I would do from here if you're not already long, guys. You had just come into the weekly open, so this was actually a really good region right ahead of the release. But going back to the dollar index and yesterday's update, a real quick look at what the broader relative dollar performance looks like ahead of the release here. You see that the dollar is mixed performance. It's been broadly strong against all of its major counterparts. On the back of this release, I think you did see yen, CAD, and sterling show a little bit more strength, putting it in the negative. But broadly speaking, you're seeing most of those gains versus the Aussie and the Kiwi. So yeah, we'll definitely take a look at both of those for you, Eileen. I showed you an update on this, or I gave you an update in yesterday's piece, but a quick look at the overnight swaps. So this is the Fed Fund futures, which is essentially showing you what the markets are pricing in as far as future rate hikes from the FOMC. See, we haven't changed much. Okay, slight uptick from where we were last, or slight downtick, excuse me, from where we were last week. We were showing 32% here. We were showing 60% here. So you did see a slight downtick. Again, these tend to be very variable. We'll note them when important, but at these peaks, you want to see those extremes start to come off. So as we were trading above 32% here is probability for a June hike, you're seeing that start to come off. We came off a big region of resistance. If you guys remember the update from last week, we highlighted 11,989, not just because it's the 50% retracement, but on a close basis, you'd want to see that invalidated to the upside to sort of thwart that break of this formation. So we could just easily have discounted this as a false break if we closed above here and continued to close above that 11,989. We didn't. In fact, Friday's or yesterday's price action was very telling. Okay, that spike took you right into the 100-day moving average, almost to the pip, before a quick reversal to close below the 11,989 level. And that's kind of what we were talking about here in the update, is that it's very indicative that it closed below, and that leaves the risk for further downside while below 11,989, specifically today, because that level coincides with the lower parallel. So now both of those sort of regions you'd expect to give some kickback, both former support, now resistance, and the 50% retracement, which we failed to close above, gives you a little bit more of a near-term bias to the downside. Now, how deep this pulls, I don't know. The initial support, or at least the major near-term support, is somewhere in the range of 11,921, 927. Actually, I wrote it down here. Right here. Okay, so that's basically, that's defined by the low, last week's low, and a basic 236 retracement of the advance off the low. But not just that. You also have former upper median line parallel, basic trend line resistance, whatever you want to call it, now support. So this is sort of the break that you would need to validate a more meaningful, let's call it, pullback here in the dollar before we resume higher. But that being said, that's sort of the game plan. 11,989 remains, okay, the near-term bearish invalidation for me. Here's what the index looks like on the 30-minute. All right, so you could see really nice working, responses to these parallels. So here's parallel support, 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 break, now resistance. Okay, this is just a sliding parallel of the same slope. Further highlights basically this pivot point that we were looking at, 11,959, and again, 11,927. Basically, last week's low is what we would need to clear, sort of validate a more significant reversal. Look, this might dilly-dally sideways for a while. Again, we're heading into the end of the month. We're heading to the start of a fresh month. There's a lot of dollar event risk coming up. So just be cautious here. But the game plan is cautiously, this thing is vulnerable, remain below 11,989. You need to break below 11,927, 921 to really validate a bigger reversal. Any questions here in the dollar index before we move off? On the 30-minute, I'm just looking at my notes here. I said add descending pitch. On the 30-minute, I was messing around with this earlier today. Just kind of was looking at this. I just wanted to show it to you. I don't have enough conviction that this is in play yet, but it seems to be sort of a decent gradient, which would give you sort of a pullback into that basic key support later in the week. Basically like into Wednesday. I'm sorry, that'd be into Friday basically. So I'm not sure if that's in play. Again, if we take this slope just to the deaded high that we made here a little bit earlier, it sees that you kind of caught support from where you are right now. Again, I don't want to stress these types of plays just yet, but one other thing that I noted when I was looking at this morning, look where the upper median line parallel comes on or lands on. It's the exact 100-day moving average. So if anything, the upper median line parallel will further give us guidance here as we travel along that moving average. Tabor, Euro, Yen. Let me jot that down. Take a look at it for you, no problem. So again, I'll update you on this one if we do end up kind of jumping with that, but for now, dollar index remains at risk. We'll continue to track those Fed fund futures. If there's any change or, market shift, I will bring them up. As far as U.S. event risk for the remainder of the session, you still do have a couple things on tap. S&P Case-Shiller Home Index, not necessarily going to be a major player, but remember that comes out at 9 here while we're in our webinar. 10 o'clock Consumer Confidence and Dallas Fed Manufacturing Index. Those are next up on tap. Later, in the week. Tomorrow specifically, the ISM data may also be important. You are expecting a downtick. Remember, with ISM, above 50 is expansion, 50 means static, and sub 50 is contraction. So we are expecting a slight decrease in the pace of expansion in ISM manufacturing, and certainly we do get construction spending and the beige book tomorrow afternoon at 2 o'clock. So this is an updated assessment of the Fed's 12 districts. Not usually a major market mover, but the closer we get, rather, to that June meeting, for sure, anything that the Fed says or any comments that comes out of any of them are likely to see some market moves here. Excuse me one sec, guys. Okay, obviously heading into the end of the week, just a quick look at where these are right now. And non-farm payroll expectations 160. That's exactly what we got last month. So the unemployment rate is expected to downtick further from 50 to 4.9%. As always, any moves in the unemployment rate, we automatically start to look for the broader labor force participation. There is no expectation for this forecast just yet. Sometimes it doesn't come out to like a day before the release, so I'll update you when we get that release. But that's going to be key, because if labor force participation downticks further, then this 4.9 downtick in the unemployment rate will basically be a moot point. And if the Fed is poised to hike next month, which I personally don't think is very likely, it's more likely you get a July hike, but if they are, they're going to want to see that the data continues to remain on pace. Adam, dollar yen. Yeah, my man, we're definitely getting dollar yen. That's on the list from yesterday. All right, so that's the dollar index. Moving right along through yesterday's piece, we had dollar yen, speak of the devil, Adam, and showing initial reaction to that major resistance last night. But we kind of recouped the whole thing, and now we're just right slap in the middle of the weekly opening range. So the range in resistance of interest is sort of just above 111. Okay, it's not so much that you had that 2618 extension, which literally caught the lows in February almost to the tick, just kind of freaky. But you had those 2 February lows. You have a sliding parallel that's in there as well. And basically that's the high you stretched into right on yesterday, literally right into that sliding parallel before reversing lower. Here's what the 30-minute chart looks like. So the basic premise yesterday I was highlighting was, look, this thing came off of a big resistance. You're at risk for a little bit of a pullback here, for sure. Now, do you want to start scalping the downside before you start counter trend trading? That's what I was saying. We kind of want to see a break below just the weekly open here. That would be the first step. They'd start to look, all right, cool. And certainly to give that Sunday gap filled, you'd at least need to move. I highlighted it here yesterday. Do I have it? Let's see where that open was. Closes at 110.17. So you need to drop into at least 110.17 just to fill that gap. 110.17. All right. And just below that, 110.09, 110.08 is a big region too. And on the daily chart, that comes out right here is the high that we made in October of 2014. Okay, which the break inevitably led to the 2014 high. But big region, clear defined levels, big resistance. Watch the opening range for the week. You would need to drop into 110.17 just to fill the gap from Sunday. Now, keep in mind there are breakaway gaps that don't fill. And that's exactly what they're called breakaway gaps for, because there's so much momentum behind the trade that once it pops through, it could be months before it comes back. But as a target into resistance, I'd still be looking for a drop into that region for dollar yen. And on its face, it's just a basic channel, really clean. 3 tags on the up, 4 tags, 5 tags on the underbelly. And yeah, you're at resistance, any way you look at it. Adam, you have any specific questions on dollar yen? Now, if we breach higher, okay, and if the consolidation here that takes place just below resistance does break, let's unlock this. You'd basically be looking for a rally into it's the low day close. Oh, this is the low day close for February, which comes in at 112.39. And then you have 112.57, which is the open for last month's trade, April trade. This whole region is pretty huge. You also have the 100-day moving average right there. So even the breakout levels are pretty clear. He says nothing specific, just waiting. Yeah, again, start of the month, first day, end of the close of the month, a lot of rebalancing. I tend to stay out of the markets just to if I do get in, very, very nimble. But sort of the game plan here for dollar yen. And if you guys notice, a lot of these trades, keep in mind, the monthly opening ranges were so clean. And they've just broken and extended into the extremes into the close of the month. So none of this should be sort of out of the realm of possibility. All right. Any questions on dollar yen? Okay. Next up on tap is the British pound. So here's what the pound looks like last night. Here's the pound looks like right now. And the major resistance was still that median line, the 50 line that you see off the lows here, and the yearly open, which comes in at 47.30. That's really the level to beat to get any upside thrust. You see that every time that we've passed through that 11, I don't know why I keep saying 11, excuse me guys, 147.30 region, the 2016 open, every time we've passed through that, the breach has been less. Okay, and we're seeing that just basically failed attempts. So that's sort of the level to beat. And I have been watching that daily momentum has continued to hold sub 60. So it suggests a little bit of an exhaustion possibly near term. Now, the pullback I'd want to see sort of hold above 145.33. That's the new, I think, that we cited yesterday as our bullish invalidation level. It's been a pretty decent level. I'll show you in the 30-minute chart. You got the lower median line parallel, basically there with it in a couple of days, and the swing highs that we made earlier in the month. Just lower is going to be the highs that you made for March and the high day close, which a little bit more of a solid confluence here. Didn't want to stack it up too high with the levels to the downside here, but here's what it looks like on the 30-minute chart for the pound. And here's what it looked like yesterday. So that rally continued through that near-term key resistance. Again, that 50 line, you saw a quick spike, failure to test that 147.31, and the turnaround. You had a nice trigger here on the upside, trigger support to give you that sort of heads up, and we came right into confluence support at 145.88. What's 145.88? It's the February high day close. Okay. There's been a pivot we've continued to watch for a couple of weeks now. And as I noted yesterday, it also comprised basically of the weekly opening range low. Although I don't typically consider the weekly opening range open until we've cycled through all the markets at least once. U.S. markets were closed. That being said, you saw a spike here quickly reverse off that low. Okay, so again, on its face, it's made a very convincing, very, very nice weekly opening range just below the yearly open. So for me, the play here is if you break out to the upside, you're still kind of stacked up, and that's what I said yesterday with a lot of different targets. Beyond the yearly open, you have the 100-day moving average, or the 200-day moving average, excuse me, and that's, I think, when you really get the upside play targeting 48.80. Okay, 48.50, somewhere in that region. You have a basic trendline support too here as well. But this would be the basic region that you'd be looking for on a topside break. Rick says later, when you get a chance, can you discuss when you mentioned monthly, weekly opening range? What are you considering for the time frame, i.e. daily? I can do that real quick for you right now. So a weekly opening range, you typically look for a Monday, Tuesday stretch, and look for that break later in the week to give you, ideally it happens on a Sunday, Monday. You get a decent range, test of the highs, test the lows, and you look for like a Tuesday, Wednesday break. It'll extend into a Friday. When you're talking about the monthly opening range, typically that happens in the first week of trade, first 7 to 10 days. The market will set a high, set a low. You look for a break to extend into the latter part of the month. Now, all of these are expectations, Rick, and it's not a strategy in and of itself, just like RSI, right? It's just another piece of the puzzle, just another tool that we can use. Sometimes the monthly opening ranges can be set in 4 days, 5 days. Sometimes the monthly opening range holds for the entire month. So here's just a perfect, a couple of basic examples that we can look at. The February opening range, right? January didn't really have much of an opening range. February opening range is right here. It's the first day of February trade. You rally like crazy off 42.38. You set a high. A couple of days later at the low day close. That opening range didn't break till the 22nd, but look what happened when it did, right? Following month opening range was a moot point. You just rallied and pushed into a new high and never broke that range. Next month's opening range right here, okay, broke on the 25th. We closed that month right into the highs. This month's opening range for sterling hasn't really been that well defined, and we've kind of made nothing but just set the opening range in the first 13 days and sit there ever since. In my mind, this was a false break of the monthly opening range because I thought the opening range for sterling was basically the yearly open into the May low day close that we have marked here. But wasn't the case. Okay, this thing saw a break, reversed, and rallied right through, so that we discounted that. Whether you call that a false break or not, irrespective, the opening range is not always going to be a play that you can use. More so, it's just an added tell, rather, on the near-term outlook for your trading bias. Make sense? So sterling, you're waiting for a long entries. Ideally, yes. Ideally, I do want to be long. This was sort of an ideal scenario if you were awake during European trade here today. In fact, even on the open, although I wouldn't have put any positions on, coming right into 45.88, which last week was a major support, would have been a decent long too. From here, I'd be looking for either a break lower to test our bearish invalidation level of 45.33, which you've seen some major pivots on. Major pivots on. It's the May low day close so far. And when I say May low day close, that's this month right here, the close. So, oh, excuse me. This is the May low day close at 43.97. 45.33, I'm getting tongue twister today, is the reversal day close that we made for the May high day close. Okay, so the high that we made was on the 3rd. The close of that session was 45.33. That's what you're looking at right here. Oh, I wrote it right. I just said it wrong. May high day close. So I'd be looking for like a breakdown from here, maybe long entries from there, or if you're not long already, that's the problem. I don't really see much of an opportunity to try to get a stop against that low this far out. If you get another pullback, might be an opportunity against that low if we get some long triggers, specifically if we see momentum hold a little bit more rigidly above 40. But that's sort of the game plan for long exposure. I want to be long. Let's just say that. Ideally, you'd get as close as you can to that lower parallel before you do it, though. Again, we haven't cleared the monthly opening range. And now that we had a little discussion about the opening ranges, guys, a quick segue back. The longer the range holds, and this is with any range, the more aggressive and the stronger the rally or breakdown can be from that origin. So the fact that this month's opening range has been preserved, we test the lows for a couple of days, we couldn't make it, test the highs twice now. The breakout here, certainly you'd expect that rally towards 45 48.50, 48.80 to be a pretty quick move. Pretty quick move. And be mindful of momentum starting to get tired here. So a little bit more reserved. You're basically unchanged on the week. Let's see if we can get some more basing here near that lower parallel. Any questions on the British pound? Weekly OR set, maybe 3. So, Jamie was also pointing out that this could be very simple, 3 waves down from the high, which kind of screams correction. If that's the case, again, you'd expect that this low to hold and be firm. So if you can get a 29 pip stop against that low on a pullback here, would be ideal scenario. Broadly speaking, you need to see a firm close above 47.31, 2016 open to get this thing going. Had that in my notes. All right. Next up, dollar CAD. Pooja, I got in just on time for you. What's up? Pooja says, hey, Mike, I'm holding some dollar CAD longs from 130.36, target 130.95 and 130.115, stop 130.14. Okay. Give me a second to go over this, and we will address that in a second. So here's what the major support is, 129.76 and 129.85. Your stops are well above that. I'm assuming this is a much more near-term position. That's the level of influence that you need to pay attention to. There's so much there. Again, for those of you who've been here every day, don't want to bore you again, but that long-term 2001 trend line, is it? (2006). So the 2006 trend line, a huge pivot, caught the highs, caught the lows. The slope has been very, very, strong reactions off that slope and price on every time scale you can think of, and that slope bisects the peaks we made last year, the break, support last year, support, support, break, resistance, resistance, break, support. So I'm working under the assumption that we've pivoted and tested that key, pivot slope, multi-year pivot slope, and I'm working with a broader constructive basis above 29.85, 29.76. Okay, so that's just one thing. Just want to put that out there. As long as we hold above that, specifically on a closed basis, I'd like to see dollar CAD travel higher. Now, in the near term, here's what it looks like. I did adjust the slope slightly from yesterday's piece. So this is the slope that we were working with from last week. I left that on last night's chart. This morning, the fact that we're getting that reaction gives me a little bit more confidence, and I think Jamie's working with something similar to this at this point. This is the slope I was working with prior. And while it did catch the highs and it did catch the lows and really nice pivots here, the turn ahead of the raised ceiling is what gave us, again, sort of an indication that you'd see a little bit more of a stern drop. But if we adjust it just a tad to go along with the high in price, you can see a little bit more of a gradient match here, more or less catching the lows here. And that gives us key support at 29.78. Bullish and validation level, in my opinion, is 29.53. Okay, that would require not only a break of that median line formation, which we're already unsure of, okay, but it would require a break just want to snap those levels for you guys of former channel resistance, now support. Very basic, right? So weekly opening range is set. Again, we just came off of the weekly open at 30.20, as we noted earlier in the session. Looks like the rally is getting a nice little run here. Just check out the 5-minute on this. Yeah, and we're not even in overbought territory yet, so it's probably got another spike high to make before you pull back, but you're looking for that push into 31.16, 31.17, this major region here. Nice confluence of the 1618 extension off the low and a basic 786 retracement off the high there from that late March high. This is ultimately the resistance you're looking for. 33.11, 33.25. So Rick, we were talking about the opening range earlier. This is sort of a perfect example of one right here, man. So the weekly opening range, again, is being set. The weekly open came at 30.20, which we just tested as support last night. It held, and now we tested as support a second time, and it held, which gives us conviction of this as the weekly opening range low. Weekly opening range high comes in right around 30.90, okay? The only problem with a trade like this is that the weekly opening range is right below near-term resistance. So on a trade like that, you just want to extend that range and watch for a key break above 31.17 or so. But that's sort of an example of how an opening range takes shape early in the week. Now for Puja, you're holding longs from 30.36. Watch the opening range high for the week. Obviously, it'd be the first target I'd be looking for in a scalp like that. You're targeting 30.95, okay, basically the high. And 31.15, right on just below this, love it. Stop at 30.14. Yeah, looks good. Looks good, Puja. Once you get into the weekly high, though, that's where I would start to bring my stops in. You know what I'm saying? Because it could just be a range hold. And if it slams into the weekly high and rebound and reverses, you're inherently going to see a test of the lows again. And I'd hate for you kind of to see all those gains evaporate on the way down. So remember, a quarter of the daily ATR here is about 27 pips, Puja. So be sparing. End of the month. Trades and directional biases are not likely to last too long in these environments. But I do like that trade in general. On normal conditions, I would love it. Yep. Puja, does that help? It says, great, thanks. Yeah, I love the entry was a little bit laid off. 36? Actually, no, that's right in the sweet spot. You're good. You're good. And now that stop that you have is also below the weekly opening range. So we'd have to break the weekly range to get through. And that's like ideal scenario. Ideal. All right. Any questions on British pound? Or, excuse me, dollar CAD? So this line that you were looking at last night here is basically also just a parallel. I got rid of that at this point because we broke it. It's just a parallel of the slope. But moot point at this point. Close 131.20. I also just want to highlight real quick. Don't want to clutter this up too much, but the high day close for the month at this point comes in at 31.20. Ah, just above here. Look at that. Not a bad region. Hey, Gary, has a question about dollar yen. Let's go back real quick. No problem. He says, hi, Mike, just to confirm, would I be right in saying that the weekly opening range in dollar yen, for example, would be 110.77 and 110.45? Yeah, so I usually just open the daily chart for that. So low here, looks like the low is 110.35. Yep. The opening range so far is yesterday's range, and the high is 111.44. Yeah, would I be right in saying that if these levels break, that would be the direction to trade. And if so, you place stops based on the weekly opening ranges if broken. So the weekly opening range, Gary, is not a strategy. It is basically a tip on bias, right? There are some people who use it as a strategy, and you can use it, contract it into a 1-minute chart. There are people who use opening ranges on a 1-minute basis. So literally like the first 15, 13, 20 seconds or whatever have you of the minute grants you the directional bias heading into the end. So the only thing I would say is this: it's a shortened holiday week, Gary. On a normal basis, I'd be right there with you, man. I'd say if the Sunday, Monday, sort of into the Tuesday stretch shows that as the high-low, that's exactly what you'd be looking for. But Gary, heading into the close of the month, heading into the open of a new month on a shortened holiday week, I wouldn't put too much face or emphasis on the opening range. Does that make sense? I'm not trying to backpedal here. I'm just trying to tell you we're not in a normal environment this week. Just because you're going to see thinner liquidity conditions as is because of the extended break, because of the key event risk they have on tap, and because of the monthly switchover. But you're absolutely right. That would be the initial range you'd be looking for on a Monday, Tuesday stretch. Absolutely. So when the opening range happens like this, guys, I typically will use the weekly open as the opening range low. And that's just because typically when we break through the weekly opening after a stretch like this, that typically is symbolic that the weekly, performance has turned negative, which would typically perpetuate a little bit more of a drop to the downside. But from our opening range for the standpoint, absolutely. On a Monday, Tuesday stretch, even if Tuesday holds within the confines of the Monday range, you'd be looking for that opening range to give you a break. Right on. Absolutely. And so actually it's a very interesting position that you had here in dollar yen. Because dollar yen's opening range, by the way, dollar yen's typically one of the worst opening range performers. There's certain strategies that work better, certain indicators that work better with certain pairs. You'll just notice that over the years. Dollar yen's one of those where opening ranges in general don't seem to do it too much, justice, broadly speaking. But like last week, just to show you an example of when the range doesn't break, you had a false break here halfway through the week that quickly resolved to the downside, failed at the opening range lows again. We saw that break to the consolidation to the upside. Finally, since that range sort of held the entire week, when the break does happen, a little bit more substantial, right? Quick, firm. So do like the broader upside, but I do think you're at risk here for a near-term pullback. Gary says, yes, makes sense. Thank you. You're more than welcome, Gary. All right, so we've covered CAD, sterling, yen, dollar index. I want to go into some of your questions, but I do want to just touch base on a couple of trades that we've been following on the radar charts over the last few weeks. So, gold. Gold. Oh, boy. This one was right on point. I mean, certainly ahead of schedule, but now we've completed, if you guys remember the consecutive days, how many consecutive bars we had seen in a row heading into last week. We talked about this in the webinar. We've now completed 8 consecutive days down this after today, which sort of seal that consecutive day drop. But the last time that we saw something of that magnitude was here. You saw a 1-day recovery before continuing lower. Previous to that was here. Okay, and that was another exact 8-day drop, and that basically called the low for the month. You saw a couple of days of sideways movement, another test of the lows on some divergence there, and a rally higher. So I do think you're vulnerable here, if not just today, for the next few days, okay, on downside exposure for the dollar index, for gold. Now this matches very well with what we're looking at the dollar index, right, with dollar index sort of coming into possible key resistance here, looking like you'd see some downside. Would certainly help to see some upside here in gold. Let's see if I adjust that trend line. In any event, 1205 is what you need to close below to sort of get this thing going. Possible slope in play, not sure just yet. Again, we'll work under the assumption that we're working on this for now. A break below here, you'd be looking at a couple of key levels. 1191, the high from October, swing low from February, and more importantly, the 50% retracement of the entire rally off of last year's low so far, and that takes you to 1175. Those are the downside targets for gold. Near term, on the upside, here's what the 30-minute looks like. So these are the levels that we've been following since last week. A slight adjustment to account for the new low that we made this week puts a basic 236 right in this sort of general vicinity up here. Okay, you have a couple of major levels at 112, 1221, 1220. We talked about that last week, but on a recovery stance here, you got some divergence into the lows. Wouldn't be too surprised to see some upside. I'd be looking for possible re-entry on the short while below 1224. That's going to be the near-term bearish invalidation level. If you can see, last time as we followed these slopes, seen some pretty nice pivots. So another one where you're kind of opening up the week just below slope resistance. This is one where you do want to pay attention to the opening ranges because they tend to break and give you some really nice moves. So as you remember on my 30-minute charts, all these vertical bars designate the weekly open. If you can see the last couple of opening range breaks that you saw, this one broke midweek, stretched into a new low right on a Thursday stretch, closed the week right next to the lows. Following week, you saw an opening range on a Monday stretch. You broke it on Tuesday. You made the lows late in the week. So here, coming into resistance, you'd expect to see some kickback, but on an opening range break reversal, you sort of have some pretty clean levels to work with. And on the same respect, if we break the downside, those downside targets that I noted on the daily chart are really what you're going to want to pay attention to, the 1191 and 1175. Any questions on gold? Generally speaking, really clean on the opening range in general this month. Here's your high. Low was set on the 10th. We broke it on the 19th. Okay? Closing the month out right next to the lows. Right next to the lows. So that is gold. Next up on tap, I do want to talk about, real quick, I'll talk about the S&P/X. I don't really have much to say on this except that, we've been highlighting that major support that we rebounded off of last week. We took it through the opening range high. We talked about that on the 25th, and that rally extending into a late month high, which is sort of what you expect. A couple of things I'll note. If we do close, well, first thing, this is the high day close for the year. Literally where we are right now. It's right here. It's the high that we made on the 20th, April 20th. And that high came in at 2103, 2104. Okay, so that's sort of resistance right now. If we push through that and we close above it, note that we're still marking divergence along the last three highs in price. Okay, this is nothing right now. If we close above that 1204 mark, that would be another divergent mark in momentum. Again, suggestive that the top side sort of is waning here. That being said, from a just support resistance standpoint, aside from the stretch high for the year, you'd be looking at the high day close from last year and a 1618 extension, broader, longer term. That gives you 2125 and 2135. Now, I don't necessarily think that we're going to get up there right away, but those are the levels. I mean, there's really not much ahead of that. Like I said, a set of the highs, aside from the highs. So that's the SPX. But anyway, going back to the radar charts that I wanted to cover, Euro Pound is coming into that initial area of support. So this was the area we were looking at last week, back on the 24th. Initial target was 75.64. A much more critical area of support is just lower at 75.23 or so. So we've made the first one. He's seeing a little bit of a rebound here that could give us a topside pop. For those of you looking for entry, this might be an opportunity for us to get back on the short side on a decent rally here. Shoot, is it starting to come off again? Oh, well, the opening range is holding. I was sort of looking for a rally back into 76.60, which coincided very nicely with some basic slope lines here to give us re-entry for a possible move into that 75.22 level. Looks like didn't get the opportunity. Maybe it'll get another upside stretch. We'll see. But the reason this region is so important is 75.22 is a 50% of the entire rally. It's the lower median line parallel for a slope I think has been defining price very well. And it's also a basic 200-day moving average. Right in there at 75.25. So it would sort of match pretty well. See a possible another spike into this low. Then it would be an opportunity, I think, to get a decent long rebound on a recovery play off 75.22. Keep in mind on these last subsequent lows, continuing to see this consolidate in momentum. You know, you've got a resistance trigger there. So again, it would be a sort of sweetheart scenario if we get that final drop into that region for a near-term recovery back towards sort of the 2012 low, the high that we made for January. Sort of all coincides pretty well right here. But in the meantime, here's the 30-minute looks like. Okay, there's that key region of confluence support. As always, guys, always remember if you need to keep or want to take a free shot, a screenshot of any of the charts that you see presented here, there's a camera button top right-hand corner of your GoToWebinar screen. Feel free. All right, so that is Euro Pound. A real quick touch on Pound Aus. So keep in mind all these things are suggesting that Pound could see some near-term weakness, right? So Euro Pound to the upside on a bounce here. Specifically, I'd like to see the drop to get long, which would give us, I think, that Pound rally that we need to get that final target. But near term, right here, see that 76.60 level holds. Pound Aus is something I've been looking at as well. Here's what it looks like on the daily chart. We came into a big region of resistance that we looked at last week and kind of got pretty messy there. Here's what it looks like. Or here's what it looked like last week. We were looking for that big region of resistance, sort of fuel a nice, decent turnaround here. It got quite messy. You made a reversal day off of the highs. Here's what it looks like on the 30-minute at this point. And I just wanted to highlight one thing. This could be a slope that's in play. And this is basically a slope off the highs that you made on the 19th, the subsequent low on the 23rd, and the high from last week. Could be a little correction that's at hand. Specifically, the fact that we're closing back below, or if we're breaking back below the yearly open, which is basically where we're trading right now, 202, basically 2021, is going to be a huge region. So be careful. Be careful here. I still think you look lower near term on the rally. If this does end up being a decent break, look for a correction of a basic retracement off the lows. And that's what we have to add on now that we've made that new high. And if you do that, a basic 236 should come just below, just there it is, just below that level that we highlighted from last week, which was the January low. Basically the 2 handle. That'd be a basic 236. So some softness in sterling, some strength in Aussie. And this is for you who was looking for Aussie earlier. Eileen, here's what the Aussie dollar looks like. Okay, initial reaction off of this major key support that we're talking about, 71.44. I know that Jamie's been talking to you guys about this in his webinars as well. Big support from a structural standpoint for a formation that not only caught the highs but has been in play for nearly a year at this point. Looks really good. Looks really good. So on the Aussie, where do you play it from here is the question, Eileen. The first target on the rebound would have been the 200-day moving average. Second target is still the yearly open, and that's where I would expect to see a little bit more of a pivot play, some resistance, inflection, whatever you want to call it. Here's what Aussie dollar looks like on the 30-minute chart. Some slope lines I've been working with, not really stressing too much. If you guys remember, I actually had a couple of decent longs on this last week and the week before. We did get stopped at break even on the half and a quarter of the last couple of scalps that we took on this. So again, trying to call a bottom is not always the easiest thing, but you're getting the initial reaction that's pretty encouraging. Kind of just wish I had more structure to it, Eileen. Let me just clean this up real quick. I haven't really been trading this pair since last week. Looking for new long entries in Aussie dollar, but it seems like chasing for the moment. Well, yeah, you don't want to buy at the top of the range here, but if this is the UK low, is it? Yeah, so if this is the UK low, if you get a decent pullback here, might give you an opportunity for a little bit of a long exposure play, but yeah, daily ATR is still only 73 pips. Look for some structure. It's typically the first thing I'll look for when I want to play a reversal play or something to that degree. Even if you remember the scalps that we took last week, Eileen, all of them had sort of near-term slope that we were looking at. So let's see if we can find something to offer some guidance. Oh, that's not bad at all. Oh, wow, that's pretty clean, actually. Okay, sorry for the silence, guys. Just going on the fly here. So the 50 median line, which is basically just the bisector of the top half and the lower half here, you could see some really nice pivots. Support, resistance, resistance, break, rally, resistance, reversal. So you would expect to see some support, and you'd want to stay constructive, Eileen, above this region here. Basically 72.10, 72.16. And again, topside break, those levels are pretty clean for the Aussie. Again, the yearly open, 72.83, is just something that I've been watching and has been a decent pivot for the last couple of weeks. And then a basic 236 is basically the 73 handle, 73.06, 73.07. Does that make sense? Okay, see the levels then. Many thanks. Makes sense. Right on. Right on. Let's see if that holds, but that's a very encouraging initial reaction both to sort of the bisectors here that you're seeing. That slope give us some guidance. But strong divergence here. Don't forget, higher high in price, significantly lower high in price. does leave this top side vulnerable near term. That is Aussie dollar. I do want to go over, is it Margie? Margie, you were asking, please can we review sterling yen levels considering inverse head and shoulders break? Yeah, so sterling yen is something that we were following last week for sure. I'm not sure what you're looking for on the inverse head and shoulder break on a much longer term. Does seem to be a decent shoulder, head, shoulder, and you're looking for sort of a break. And if this is the break, I always take the conservative measured move. It's an ugly one, but it would still be considered. If we take the conservative move here, gives you a target about 173.97. Actually converges on a couple of different things heading into July, heading into early July. But that would be sort of the initial measured move you'd be looking for. And that's a conservative one, okay? A lot of people would use sort of this sort of stretch, which would take you even higher into the low day close from last year. And that would basically be like sort of 76 region. I tend to be a little bit more conservative on that. So could be the play. You saw, we broke through yesterday. Again, we haven't quite finished filling that gap. I don't know if we will. The near-term immediate top side, I still have at risk on sterling yen. Okay. I still think you can get a pullback back to test that former resistance level. Basically, to fill that gap would be in test of former median line resistance. And that would be like a sort of to fill the gap, test that resistance, then move off. Here's what it looks like on a near-term chart. Let me zoom this out real quick so you can get some perspective. Okay, so this is a basic retracement using the high that we made in overnight trade. You could see that this rally basically came into the median line. We're sort of straddling that. So you could see a scenario building divergence into the highs where you get a little bit more of a pullback, fill that gap, test former resistance as support, then move off. The only reason I'm not interested in doing anything on the long side here is I'm not interested in doing anything unless I get a decent pullback because you came right into resistance. 63.50 into 63.86, which is the 2014 low, is a big resistance region. And you obviously look at reaction you just got. In fact, today's candle, if we break 161.18 on the downside, would be a nice outside day reversal candle. All right, so just keep that in mind. Weekly open and near-term support would be 161.20. A break of that, in my mind, would be a break of the weekly opening range. I'd look to place some downside targets into the 50 line, where again, you'd start to look for some possible long exposure. Makes sense, sort of fits with near-term sterling weakness, and we looked at the dollar yen earlier in the session, and again, dollar yen possibly looking like it's trading towards the upper side of the ascending channel range. So a downside move from there in the near term, which further exacerbate this with some yen strength. Does that help, Margie? On sterling yen, also from the 23rd update on the radar charts, we talked about euro pound, we talked about sterling Oz. I just want to touch on the Aussie key. Remember this? Big region of support that we were coming in. Well, this thing kind of exploded off that region. We spent a couple of days down there, but when we finally did, the initial reaction here I think is pretty decent. So here's that same chart. Okay, here's that consolidation that we were looking at. You got that breaker Oh, sorry. We opened it up a little bit as far as the slope of the resistance range, but we got that break late in last week, failed at the opening range high for the week, and we closed within last week's opening range. So if this break is legit, we should find some support along this slope, and this is the slope I added this morning. If we find support along that slope, I'd like to see Aussie key move, excuse me, I can't speak today, much, much higher. Major key resistance or initial area of resistance would be 107.86. And that coincides, again, tomorrow with basically the upper median line parallel and a basic 236. So another one that we've been watching, I think it will get you a little bit more bang for your buck here. If you missed out on the Kiwi trade and you're not currently on the swing side of the Kiwi trade, or even if the Kiwi does give us a little bit more of an acceleration, this might be a decent play here for some Aussie strength alongside that. I still like the Aussie rebound idea, guys. We talked about that earlier. I just kind of want to see a little bit more basing and some structure to the ascent. See if we can't see that drop in 72.10 again. Margie says, good job, Michael. Thanks. Hey, you're more than welcome, sir. I think I got everyone's question. Ooh, who wanted Euro Yen? Euro Yen coming right up. Oh, and who's saying Euro Aussie? Sorry, I didn't even see that one. Euro Aussie. Okay, we are over on time. So, guys, I'm going to do this real quick. Here's what Euro Yen looks like. I don't have a major game plan for this one just yet because I've been pretty bearish Euro and Yen. Here's what it looks like. In my mind, this is just a simple monthly opening range. There's nothing to do here aside from trade it as such. So your opening range low, your opening range high. Heading into the open of June trade, those are still the levels to beat. I mean, it's certainly a contractionary range, so the lows are higher lows. The highs have been lower highs. So if this is a near-term sort of breakout, which I'm sure some people will say, excuse me, if this is a near-term breakout, guys, sorry about this, then you would still need to see a break of the opening range high to validate that, looking for a rally into the 100-day moving average at 125.53, and then coincidingly, nice pivot, also major key fib at 126.08 into 126.37. It's actually just a major low and a 618 extension off the high. So that coincides very nicely a little bit later in the month at basic trendline resistance. So I really wouldn't trust the breakout until we clear 124.60, to be quite frank with you, as far as Euro Yen is concerned, Tibor. And as far as Euro Aus, a quick glance on that one because we're a little bit more up to date on that, I think, than Euro Yen. Looks like this. Looking for the pullback here to give us some support near 100-day moving average. Coincides very nicely with the median line. Somewhere like that. 153, basically 153.10, the 153 handle. More critical key support here would be somewhere like this. All right, so we'll go over these tomorrow, guys. Feel free to take a snapshot of these charts as need be. And again, we'll jump into this a little bit more tomorrow. So watch some of those releases later in the day. Dallas Fed manufacturing comes out at 10. Again, later tonight, I think you're pretty light on the data. You do get some Aussie data, but nothing of note. And we'll keep you updated on the real-time on the SB Squawk. Sorry about that. See you guys tomorrow morning, 8:30 Eastern. Same time, same place. Best of luck trading. Cheers.